Yes, Aishwarya.
Yes, ma'am.
Yeah, you can start, Aishwarya.
Yes, ma'am.
Yeah.
A very warm good morning to everyone. I, Aishwarya Shah, student of final year B Farm, welcomes you all for today's session organized by Institutions Innovation Council of Sihagar Technical Education Societies, Sihagar College of Pharmacy. It gives me immense pleasure to welcome our guest speaker for today. Our today's topic for the session is avenues of funding for startups, including angel and VC funding for early stage entrepreneur. Without much delay, I now request Dr. Sadhna Raut ma'am, conveyor IIC, to please present the preamble for today's session. Thank you.
Yeah. Yeah, Aishwarya, thank you. Today we are joined here for the session on avenues of funding for startups, including angel as well as the VC funding for early, particularly for early stage entrepreneurs. I, Dr. Sadhna Raut, convener, Senior College of Pharmacy, Institutions Innovation Council, welcomes you all in this session, and also welcome Dr. Vivek Jain sir for this session, and also giving, thank you very much for giving time to guide our students for particularly for on this session. So in that session, sir will cover what do you mean by angel as well as the VC funding, and also what are the ways of funding, particularly to start the startup, including that angel as well as the venture capital funding. In case of it, particularly, first of all, angel is nothing but what? In short, we can say that angel is the person who can expect a financial return as well as invest locally or the regionally, we can say. And also those who are guiding to entrepreneur also, we can say. And angels are reach often influential individuals who choose to invest in high potential companies, and that angel investors particularly affluent individual and who invest their own money into the startup ventures. And in case of your venture capital, the capital invested in a project, and which includes, or there is a substantial elements of the risk, typically a new or we can say expanding business. In short, we can say equity financing, which is especially designed for the funding risk and high reward project. So which will help in the industrialization of a country, as well as it can help more in the technology development of a country too. These are the advantages behind this, and what is the motto behind to arrange such a kind of session? It is particularly for the early stage entrepreneur, those who wanted to start their own startup. These students can benefit it from this session, as well as faculty too. And the objective behind this is to get information, or we can say come to know the concepts about angel and venture capital also, and what's the difference in between them. And also all the students faculties can understand the what are the avenues of funding for the startups. So with this preamble, now I would like to hand over to Aishwarya to proceed the session. Thank you very much giving opportunity to present preamble over here. Thank you once again.
Thank you so much, Sadhna ma'am. I now invite Professor Yogyata Pathare ma'am to please give the opening remarks and introduce our guest speaker for today. Over to you, ma'am.
Okay, thank you, Aishwarya. Am I audible?
Yes, ma'am, you're audible.
Okay, so very good morning to all the respected and dear ones. I, Mrs. Yogyata Pathare, on behalf of SCOP, heartily welcome to our resource person, Dr. Vivek Jain, sir, for accepting our invitation for conduct of today's session. Thank you so much, sir. Srinagar College of Pharmacy established the IIC in 2018 and growing under the guidance of our respected principal and president of IIC, Dr. Rajesh Patil sir, and convener Dr. Sadhna Raut madam, and other faculty and student members of the IIC. For developing the ecosystem in our college, every year we conducted various programs on internship, innovations, startup, etc. Under the roof of IIC, SUP having many best practices like ideation competition, innovations ambassador training, etc. We are the mentor of IIC and currently having an 8 institute under the mentor-mentee scheme. We also guiding the 3 school under the Atal Tinkering Lab. SUP having its own Center for Drug Discovery and Development, Center for Innovation and IP Management, Center for Incubation, and also having a startup policy. SUP IIC has many achievements in its credit till date. We are having an 4+ ranking from last 2 years. SUP also selected as a mentor of IIC. Then many faculties we are having who is an innovation ambassador and also developing a many entrepreneur every year. Today's session is also one of the part of the IIC. With these brief opening remarks, now I welcome our today's resource person, Dr. Vivek Jain, sir, who is the virtual CFO, practicing chartered accountant, startup and MSME consultant. So Dr. Vivek sir is having an more than 30 years of experience in heavy engineering equipment manufacturing, auto OEM, thermal power projects and generation, wind power, PVC based industry and large education group. Sir is Vice President of Startup Innovation Cell, Confederation of Industries MSME, Director of COE Finance, Pune Management Association, mentor in a finance and mentor in a business strategy at Pimpri Chinchwad Smart City Startup Incubation Center. Sir is also the advisory board member of Suryadatta Group of Institutions, then Entrepreneurship Development and Startup Innovation Cell, Nevila, Wadia Institute of Management Studies and Research, Pune. And Sir is also the fellow member of the Institute of Chartered Accountants of India. Earlier, Sir served as the director and CFO with ISAR Power Groups, CFO with Walchand Nagar Industries Private Limited, CFO with MIT World Peace University, and head of the finance and accounts with Sujlan Group's Lumax Industries Limited, Bhilai Engineering Corporation Limited. With this brief introduction, now I request Dr. Vivek sir to proceed for the session. Thank you so much, sir.
Thank you very much, Madam Yogita and Madam Dr. Sadhana Rao. First of all, thanks for a nice introduction. Just a small correction. I have not done PhD. I am not doctor. I am not educated like all of you. I am a chartered accountant. Madam Sadhana has made my work today very simple. She has already introduced what is angel investor, what is the venture capital fund. Now I will be able to devote more time on my crux of the subject, which is the various avenues for the angel startup funding. Yeah, so let's start. Today we'll be covering, first of all, we'll just recapitulate what is a startup and what are the stages of the startups. Then we'll go immediately on the various options of funding. I'll be covering in very detail angel investment funding and venture capital funding. Rest all also I'll be covering in detail, but definitely I'll be giving more time on the angel and venture capital funds. Yeah, ma'am, next. Just to again recall, rebrush, what are the different 4 stages of the startups? Why it is important? Because you'll have to understand at which stage you have to approach which kind of investor. Because where a person gets the funding at the maturity stage, he is not fit or he or she is not fit for the initial stage. So you have to understand and able to differentiate what are the various stages. The first stage, of course, is the initial stage of the startup, where you have mostly the one source of funding, which is the bootstrap funding, which is can I request everybody to put on mute, please? Thank you. Thank you. At the initial stage, you have mostly one source only, which is the friends and family and your own fund, of course. Second stage is early stage. Here you have various avenues. Third is still the options are more. At the maturity stage, and everybody comes to you to do the funding if you are successful. Because normally, whenever the sun rises, we always worship that. So that's the story everywhere. Next, please, ma'am. Now we'll come to know, we'll understand what are the various avenues for funding of startups. Next, ma'am, please. The Indian startup ecosystem has come a long way, with many tech startups going public, and nearly 42 companies have become unicorns in year 2021. In 1 year, the 42 Indian companies have become unicorn. Last year, the Indian startup raised $42 billion in funding across almost 1,600 deals. And almost 2,500 investors participated in this funding. 2,500 investors participated. $42 billion. It's a whopping. As I told you, normally the funding for any startup begins with the bootstrapping. Bootstrapping is nothing but your own funding and friends and family. As the business grows, your need for operation, expansion, marketing, production, working capital, that keeps increasing day by day. Depending on at which stage you are, your ability to generate a return, how successful you are, you seek funding from various investment avenues and normally start with the angel investment funding. Then you move to the venture capital, then you go for the PE funding probably, then you go for some other avenues also. Next, please, I'll be telling you about 12 avenues, different avenues today. What are there? There are many more. It is not a 12. What I am saying is not the exhaustive list. I have selected this, which are the most prevalent, common, and you can get it. If you divide the funding for any startup or any company for that matter, broadly you can divide it into three parts, three types of funding. One is the equity funding, debt funding, and government grants. I'm sure you must be aware what is equity funding, debt funding. I'll just briefly touch upon. Equity funding is when you share your stake in your company, means you give some share to the investor in lieu of the investment made by him. That is the equity funding. Debt is just a loan you take every year. In case of equity, you share equally the return also, means the profit also. The equity shareholder doesn't get the interest, whereas debt is a loan. So here the investor gets the fixed interest every year. In return, whether you are earning profit or you are incurring losses, he is not bothered. He has to get his percentage of the interest. Government grant is a grant. It is given and government gives it to promote you. You need not to return it back, yes, but you have to show the judicious uses of those money to the government. Each funding options has its all the pros and cons. Of course, for every action there is some pros and some cons. Equity funding has no repayment pressure, but you have to share your stake, as I told you, and it is the most expensive form of funding. Mind it, it is most expensive. Till you are not making money, the equity shareholder will not be getting any share. But once you start making money, you start earning the profit, you have to share. Suppose he is the 25% shareholder of your company, then you have to share the 25% of your profit with him, irrespective of the amount invested by him. Now the startup ecosystem has evolved beyond the angel and venture capital fund. It's a very the narrow field if we talk about only the angel and venture capital funds. Historically, these were the major sources for the startup funding, but now the avenues are open, wide open. The startups can raise funds from different kind of investors and platform based on their needs and stages, as I have told you earlier. Next, please, ma'am. Yeah. As I told you, I'll be covering these 12 avenues. At the initial stage, normally you have the angel investment funding and the family and friends. That's all. Early stage means when you have something on the ground, that you have developed a prototype, you have plan for the next leap, then the angel network platform come into the picture, venture capital funds come into the picture. Once you convert your prototype into the commercial and start making the sales, that is the growth stage. Understand the differentiation. What is initial stage? At initial stage, you just have the idea, nothing else. Early stage, you have prototype. You have some plan, but not very firm. Growth stage, you have a firm plan. You have started the commercial operations, started making some revenues, maybe losses, no issues, but that is the growth stage. And you move to the maturity stage once you have the quite a good amount of sales in the market, you have good amount of revenues, you start earning the profits also. That is called the maturity stage. So you see that different options are there at various stages. Initial stage, as I told you, only two options you have primarily: friends, family, that is the bootstrapping, then angel investments. Early stage, angel network and platform. When the angel investors converge at one place, that is the angel network. Then comes the venture capital funds. When you reach the growth stage, private equity, venture debt fund, government grants and fund, accelerators and incubators, they also start funding you. Sometime at the early stage also accelerators and incubators fund you. Family offices, crowdfunding. Just yes, please. Hello. Yeah. Growth stage. Private equity, venture debt fund, government grants, accelerator, incubator. Accelerator, incubator come into the picture at this stage also, early stage also, sometime. Crowdfunding, debt from bank and financial institutions, and revenue-based financing. Now we will discuss all these options one by one. Family and friends, need not to discuss. Everybody understand what is that. I'll start with the angel investors. Please, ma'am, next. Now, what is angel investment? Let's understand who are the angel investors. Sadhna Raut ma'am has nicely explained already. These are usually HNI senior executives or owner of some successful startups. What is the quantum of angel investment? Normally at this stage requirement is small, so investment is also small. Normally it ranges between. It is not a hard and fast. this $25,000 to $1 million. This is not hard and fast. It is just a indicative number, which normally we see that the angel investors normally invest. How and why the angel investment is done? Generally, it is very difficult for any early stage startup to get funding from the banks, financial institutions, because you don't have any track record, past track record. You don't have the collateral security to give. Collateral security means in lieu of the loan you are taking, you have to mortgage some property. That is the collateral security. You don't have at this stage, because the startup, no, what we have seen, most of the startup founders, they are not, and mostly at the young age, nobody is affluent. But after doing the due diligence of business idea and potential, angel investors normally take the risk in the expectation of the high returns, and they know that if they understand and if the idea clicks to them, then they can very well guess it, because they are the experienced people that yes, this startup will turn into a big business going forward. So he expects a very, very high return in a short period of time. So he takes some, he gives some money and takes the equity. But at that point of time, what is important is the valuation of the startup. Because if you give for a small amount 25% or 50% of your equity, then after 5 years you should not have the regret. Yes, ma'am, please. Normally, what angel investors look for before investing? First of all, they see that the startup founder has the vision, or whether he has the belief or the conviction about his idea and product. That is the most important thing. If you yourself are not convinced about your product, your business idea, then nobody will be convinced. You, first of all, you yourself will have to convince yourself that yes, it will click. You should have a solid business plan, and you must have a very good pitch deck. Pitch deck is a very important document which you have to present to the angel investor. With this, he understands what you are and what you want to do in the short term of time and mid term of the time. He doesn't look at the long term. Normally, angel investors look for the short term and medium term. Short term means 2 years, 3 years, and medium terms maybe 5 to 7 years, not more than that. They want to see whether you have the clear-cut thought process, you have the data to substantiate your vision, your belief, your business plan. He looks at the traction and scalability. If you have some product which is not the scalability means it should grow multifold in a short period of time, with very small issues which you have to just fix up. And also he wants to see that you have a properly tested prototype or not. This is not mandatory, but yes, when you have a prototype ready, it becomes easy for you to get the funding. Next, please. He looks at what is the target market size, competitor analysis, how many competitors are there. If there are many competitors already in the market, then definitely it would be very difficult for you to survive. Today, if you want to try to compete with Amazon, it's not viable, because that market is already very, very crowded. Reasonable valuation, substantiated with the data. SWOT analysis. You must present a very strong SWOT analysis. What are your strengths, weaknesses, opportunities, threats? Good, you should have a very good team, but it should be very lean and with very high skill and dedication. It should not be part-time type of people that they are all the day they are working in the corporate and in the evening 1 hour, 2 hour, just they are giving their time here. If somebody is investing money, he expects that you are working on this business wholeheartedly. It's not you should not have most of the time the fallback arrangement like कि मैं साथ नौकरी भी कर लेता हूँ. No. You should be able to convince and tell to the investor that what is the exit strategy, because the angel investors normally they want to get out of the business. It is not their work to do the business. They want to make quick money. Remember, today they will invest with you, 3 years or 4 years down the line, de-invest, invest somewhere else. From you, he will make 50-60% profit, maybe 100% profit in the 4 years time. Invest with somebody else, again multiply, because he is taking risk. So he deserves a very high return also. So you should be able to present the exit strategy. The exit strategies are basically merger, acquisition, or give him the good valuation and exit him. These could be 3. Any other possibilities also can be discussed. Now the big question is how to find the angel investor. Next name. There are not very, there is no rocket science behind this, finding the angel investor. If you have a very strong product, you will get it. If you don't have a strong product, it's difficult to get. It's as simple as that. सबसे पहला होता है these family and friends. If you have good family and friends, affluent people, they would also like to invest with you, because they know you, they have the confidence in you. LinkedIn is a very strong source for connection with the corporate world today. Twitter, other social media platform, and one very organized way is the angel network. These are all not organized. You have to put the efforts here individually. Here you can approach to the angel network. In India, there are many angel networks. Not only in India, globally you can approach to any of the angel networks. Next, please. Now I'll come to the angel network and platform. Angel network is nothing but a group of the angel investors. They are organized at one place, converge at one place, and some network, angel network operators, there are many angel network operators, the platform operators, who converge all these angel investors at one place, request them to pledge their money or pool their money to invest in the startup. What do? They normally have the office, they have the good boardroom, so they keep presenting the sessions of various startups and give the invitation to various angel investors. They come there, the startup go there, present their idea. If the investors like that idea, it's more like a Shark Tank what we have seen. So if they like the idea, they invest in you. If they don't like, They don't invest. You have to share some percentage of the funding with the angel network platform. This is how the angel network works. Angel networks normally work. The advantage of angel network platforms, they operate as a group. They bring a lot of angel investors at one place. You can get large funding. Also, you can hedge or secure the risk also. There are various means and ways. Sometime as a commission, these platforms get some equity ownership also in the startup, and they mentor also these startups. In India, some popular, not India, in India and globally, some popular networks are AngelList, Venture Catalyst, Let's Venture, Mumbai Angel Network, India Angel Network. These are the angel networks. Next, please. Now we will come to the venture capital funds. What exactly is the venture capital fund? Already Madam Sadhana has dwelled upon this. I'll not discuss much on that. How to get the venture capital fund, I'll focus more on that. Before getting into this venture capital issue, if anybody has any question on the angel network and angel platform, welcome. I'll reply it right now. Anybody, please. If has the question, he or she can ask me right now.
Sir, at last, we will take that question answer, sir.
No issues. No issues. Because that would be too heavy and people will forget that I have seen.
Yeah.
No issues. No issues. As you say. What is venture capital? Venture capital is the finance that investors provide to the startups, small businesses. Normally, these are having long-term growth potential. Venture capital funds are utilized in streamlining business operations. Normally, what happens? The venture capitalists come into the picture when you are already at the mostly end of the early stage or at the growth stage, mostly at the growth stage. Before that, they don't touch upon, because they want to see the scalability. They want to see that you are already in the market. You have already started selling the product or services in the market and started generating some revenue, may not be profit. They don't look at immediately the bottom line, but yes, going forward, they look at the bottom line also. So you have already set business. I would not say set business, but your business is already started. It is still in the process of stabilizing. It is not yet stabilized. At this stage, the venture capital fund enter. At this stage, they have very strong system of monitoring your business also. So they help you in streamlining the business operation. By what they will do, if they are convinced with your business, you're convinced with their idea, your idea, then they will fund you. And they mostly force that they will nominate one of the their representative as on your board. They will start attending your board meetings. They will give you a bunch of the MIS. Time to time, they will be requiring this. They will start monitoring the MIS. With this, automatically your system streamlines. Your business operation is streamlined and start developing. They also help you in development of your business. They also help you in launching new product or services in the market, but their monitoring is very strong, very stringent. You have to run with them, because again, they are not going to stay with you for very, very long. Maybe 5 years, 3 years, 4 years, 5 years, just they will get out of your business. Running your business is not their business. Their business is to get the high returns in a short period of time, again, like the angel investors. But here, their stakes are high. They give a bigger funding than the angel investments. And what is venture capital? Again, it is like the various angel investors become the part of the venture capital fund. But there is a thin difference between the angel network platform and a venture capital. Angel network, normally they are independent to each other, the angel investors, but in the venture capital, they become like the shareholder. Venture capital fund normally comes from banks, financial institutions, and in some cases, the high net worth individuals also. Venture capital funds are normally given to small businesses because they cannot go to the banks and financial institutions, because banks and financial institutions require a very, very good track record, big collateral security. The venture capital fund again take very high risk. They invest where you don't have the track record, you don't have the collateral security. They normally take the stake in your company up to 49%. Then try, unless something goes wrong, not to take control on your business, because they don't want to take that headache. The controlling remain with you only. This is all about the venture capital. Next, please. How now the venture capital fund, venture capitalists give you the funding? The first and foremost, which is most simple, is the equity. They give you the fund and take your stake. Sometimes they give you the conditional loan also. Means conditional loan is what? Yeah, I'll take some royalty, I'll take some interest, I'll take some commission on sales. This could be the conditional loan. Another option of getting the return is the income note. Basically, it is a debt plus conditional loan, both. Then the quasi equity means they give you a kind of a loan with the repayment option. It is not loan exactly, it is a quasi equity. So in the balance sheet, it is considered as the quasi equity, but it is shown as the loan. So it is mostly unsecured and it is having a flexible repayment option. In the loan, the repayment option is quite stringent, but quasi equity, it is flexible. Participating debentures. What happens initially, you don't have much money to give back as a interest to the investor or the lender of the money. Then initially you give a very small amount of the return to the investee, probably a 3% return, 4% return. And when after 3-4 years you start earning money, you give higher returns, means higher rate of interest, maybe 15%, 20%. And make up what you had given less in the beginning. Another option could be you take the right now loan or the money from the venture capital fund and give your controlling stake to somebody else. You keep some stake. Means you are acquired by somebody else. The last and more matured option is the IPO. When you reach to some stage where you can showcase yourself to the public, then the IPO comes into the picture. Initial public offering. Yeah. Next, please. Now we'll understand what is the difference between the thin line of difference between venture capital fund and the angel investor. Next, please. At the angel investment level, that is the seed funding you get. Venture capital again give mostly the seed funding, but the second round of the seed funding, mostly not first round of the seed funding. It could be second or third round of the seed funding. And in some cases, it is a growth fund also. Normally, angel investors are the individuals. They invest their own money. Venture capital funds normally are the organized fund house. And those fund houses deal with the investors, individual investors. Ultimately, they get the fund from the individuals and give it to you. So there is one intermediary in between, which is the venture capital fund. The quantum at the angel investment level, mostly it is maximum 7 to 8 crore. As I told you earlier, $25,000 to $1 million, which is the 7 to 8 crore. And in case of venture capital fund, it is 1 to 5 million, which is the 7 or maybe 8 to 40 crore today. Stage. Angel investment, normally you take the funding at the early stage when your revenue is not yet, it started, only prototype is ready. Venture capital fund, as already told you, that you have started generating the revenue. May not be profit. In case of angel investors, they themselves do the due diligence. But in case of venture capital fund, it is done by the qualified people. How is your business? In case of angel investment, they normally assess themselves. In case of angel investment, the returns are very high and at the same time risk is also very high. In case of venture capital fund, the definitely risk is lesser than the what angel investors take, but still it is high risk, but definitely by this time you become a little safe. Next, please. Now we will see the next option, which is the private equity. When you attain the growth stage, you require big fund. Now, how to get that money? Venture capital is having its own limitation. Angel investment is having very, very limited resources. Now the private equity firms come to the picture. Normally, investment is done for the closely held company which are not publicly listed. Normally, PE fund is provided to the matured companies. You start, if not matured, then the growth stage at least, or not the early growth stage, later part of the growth stage. PE funds are utilized for the financial and other operational restructuring of the company. Mostly PE firms expect to have the 100% or maybe controlling stake in your company. They normally do not invest for a small stake. This is the private equity. They are the large firms. Next, please. Now, what is the difference between the private equity and venture capital? If you see the picture, you can make out yourself what is private equity and what is, because the picture always one picture speaks about is equivalent to the 1,000 words. You can see the picture and understand it. I'll explain you in the next slide. Next, please. Venture capital is again the second stage of the seed capital, second round of the seed capital mostly. And private equity, it is a growth capital when your company started, has already become big. Venture capitalists normally fund the idea. They look at the idea and fund you. You have not yet started making profit. Private equity firm normally comes into the picture when you have profit. You don't have profit, they will not come into the picture. Venture capital fund look for the very high growth in a short period of time. Whereas private equity firm look at the stable business and continuous profit. Quantum, basically $1 million to $5 million. Private equity normally comes into the picture for more than 10 million, not less than that. Venture capital look at the top line only because you have not started earning the profit. Private equity always monitors and start first look at the bottom line, which is the profit. The venture capitalist is always having idea of looking at the appreciation in the valuation and get out of the business once you mature. Whereas private equity firms normally look at the perpetual, means continuous profit. So naturally their returns, they expect a less return. Whereas venture capitalists look at the high returns because they take the high risk. In private equity, the risk is comparatively very, very low. Next, please. Now comes I have in detail covered the venture capital fund, angel investment, what is the difference between the private equity and the venture capitalist, what is the difference between angel investor and venture capital. Now I'll come to the venture debt fund. As I have already told you, the equity is the most expensive source of funding for any startup. But you don't have any choice at the beginning of the stage because you cannot, nobody give you the loan because you don't have the money to give back the interest. And without collateral, nobody gives the loan. So when you attain the maturity stage or the mid of the growth stage or later part of the growth stage, you become eligible for the debt fund also, and venture capitalists come and give you the loan also. Mostly it is given by the non-banking financial institutions. And these funds are mostly given to the startups which are already having the venture capital funding with them. Because when the venture capitalist is on the board of any startup, it is considered that the system of your company is already streamlined with the help of venture capitalists, because their monitoring system is very, very stringent and very tight. So they have already made you a systematic company. Then the people get the little comfort. Yes, they have the systems in place, so let us fund them, and they give you the loan. Now the question is why you will take the venture debt fund, because venture debt fund are the costlier than the bank loan. You cannot get the bank loan because you still don't have a positive bottom line. You don't have very big top line. You don't have the collateral security to give to the banks where you can get the cheaper funding, or there is a limit for anybody to invest, the angel investment or venture capital fund to invest in you. Then the venture debt fund come into the picture. And this fund is mostly used for the working capital, to meet the working capital requirement. Venture capital fund, they give you the loan, and in lieu they take the non-convertible debentures from your company. That's all. Few venture debt funds are Alteria Capital, Trifecta Capital, which are providing the venture debt fund to the startups in India. This is the venture debt fund. Next, please. Government grants and funds. As we all know, the year 2016 was a year for the startup, in which the government of India launched the Startup India program. Since then, they are trying to promote the startups. They give various grants to the startups. The normally government disburses the fund as loans through the SIDBI, which is the Small Industries Development Bank of India, under Funds of Fund scheme. In Pune also we have a SIDBI, big SIDBI setup. It's very close to the Inox, opposite Central Pune. This program offers grants like 80% rebate on the patent cost, income tax exemption for the first 3 years to the registered startups, and many more. Some funds also they offer under Funds of Fund scheme, India scheme. Next, please. This is government grants and funds. Year 2021 was again a very good year for the startup, where, as I have told you already, 42 Indian startups became the unicorn also. $42 billion funding made to the startups. And Government of India also launched the Startup India Seed Fund scheme, which provides seed funding support to the early stage startup. During the current year, the government has allocated 1,000 crore for the Funds of Fund for startup, and 283 crore for seed fund under the Startup Seed Fund scheme. This is what government has already allocated for all new startups. So good money and big money. Yeah, next please. Accelerators are incubators. This is a quite matured source now, and many accelerators and incubators fund at the early stage also, apart from the growth stage. But they also prefer that startup has already started their business. They have started uh, some revenue. Basically, incubators and accelerators are like the prep for the startup. They nurture them there. They run various programs for the new startups. The program runs from 6 months to 3 years. In this, they provide with funding options and a platform to connect with investors, mentors, and other startups. These programs are very, very important for every startup, and I would recommend and suggest that every startup should attend or should be connected with some or other very active incubator. That is very important for your growth. The incubator also should be active. The peers also should be active there. Because I visit a lot of incubators, I conduct the programs, 1 week program, 6 months program for many a couple of incubators, and I see that there is a very high potential, and but they require initial grooming. All startups mostly require the initial grooming because they mostly come from the tech background. So they require a lot of commercial skills. They require a lot of marketing skills. They require a lot of management skills. So these incubators help you develop all these skills. Mostly these accelerators and incubators also take equity stake in your startup for lending the support to you. They also help you sometime in the funding also. There are now, I'm aware that there are a couple of incubators who have started arranging the funding and started acting like the angel platforms also. That's very good for the new startups. There are some accelerators. These accelerator program for Indian startup include Y Combinator, GSF Accelerator, Microsoft Accelerator, Google Launchpad Accelerator, Geo Gen Next, amongst many more. These are the most popular and most respected one who are really doing good work for the startup. Next, please. Another very good funding option and comparatively less stringent if it clicks is the family offices. There are many family offices in India. The even the old breed of business houses, they are maybe old breed, but they always run with the time. That is why they are today they are there. So they have created their family offices and start investing in the startup. For them, that kind of money, 5, 10, 25, 50 crore is small money. But what they look at, the new idea from the new generation, and they jump into that new idea and invest into new startup because they want to break that stereotype of business what they are doing. Family offices, as I told you, for them 25, 50, 100 crore is not big amount. So they have more patience. They give more time to the startup. They give more freedom to the startup. So that if the startup is having good intent and good idea, then he can grow multifold with the help of them. They lend you the support in terms of management also. They lend you the support in terms of your grooming also, apart from money. So that's very important because they are already having their own setup. They provide the office space also. They provide their trained senior people also. So it becomes a very big support. Currently, India is having more than 140 family offices, which are heavily investing into Indian startup. It all started with the Honorable Ratan Tata ji, who started investing in various startups long back. People have seen that growth story. When they had seen that the Ratan Tata ji, like people, when he is investing in the startup at this age, then why not we? And they have also come and started as a good cause also for the Indian economic growth. Of course, when and even today, when the Ratan Tata ji invests the money into the startup, his idea is only and only. His idea is not to make the money. His idea is only and only growth of Indian economic conditions. That's all. Growth of the young businessmen. That's all. They have been proactively involved in more than 50 deals since 2015. Now it is expected that more than 30%, they will be contributing almost 30% funding to the startup, and it is estimated 100 billion by 2025. It's a big amount they are investing, and for them, this is not big. For probably the startup, it is quite a big amount, big chunk. But it will definitely help grow the businesses at very fast pace. Next, please. These are the various business houses which are having their family offices. Adani Group, Bharti, Crompton Greaves, Havells, Hero, Godrej, apart from, of course, Tata Group, many more, Piramal. You can see many groups are there. Next, please. Now we are reaching to the last stages of our presentation. So be ready for question answer session after this, please. Crowdfunding is another option, but it has not gained very high momentum in India because of many scams in between. Now, what is the crowdfunding? Basically, what happens? The retail investors, they are not the angel investors. They sometimes look for the alternative investment option, and they get together and invest their money in some startup. So it is basically unorganized form of the angel investment kind of thing, and they invest smaller money than the angel investor. But since it is a group of people, so that pool becomes a bigger. Here, the every person in the group invests a fixed amount, only and only with the expectation of high returns. This is again most of the time they look for the equity in the your startup, but it is not a organized setup, so the legality of this group is not there, and sometimes it is questionable also. It is most of the time prone to very large controversies, scams. SEBI normally discourages this type of unregistered crowdfunding platforms, and they say that never participate in these platforms. Still, there are many crowdfunding platforms. So, unfortunately, government has neither said that they are illegal or legal. So, some regulation should come there so that if it is illegal, then illegal. If it is legal, then legal, and they should have some regulatory framework also. But right now, it is not there. There are a couple of crowdfunding platforms I have mentioned here. You can see that these are the last line. Next, please. Now we will see what is the debt from banks and financial institutions, and normally who are eligible for this. Next, please. Can you just go back now? You can see the picture again. Once you are matured, then it is a low-lying fruit for any lender. So they normally give you the fund when you are matured. Next, please. What I have discussed, these are not the convention. They were not the conventional funding options. That is very conventional funding option, which is there in the entire world for long. That option is also still holds good, but that comes at the maturity stage. And this is given for different type of funding needs. When you are at growth stage, you require the plant and machinery equipments. For that, you can take the loan. You can take the at the maturity stage business loan, working capital loan for different terms and different periods. At idea stage, the bank loan is not at all the viable idea, because unless and until you have more than 100% collateral security, means they look at normally 150 to 200% collateral security. Suppose you want to take a loan of 1 crore, then you will have to give the security of 1.5 to 2 crores rupees to the bank in the form of house or some commercial property or building, which is not a viable option. And still, the bank prefer not to give loans to the startups. There are certain, of course, NBFCs which give the loans to the startup, Fullerton India, Omozing. These are the couple of NBFCs which offer the loans to the Indian startup. So it is still not a very good option. If we are at the early stage, then definitely it is not the option at all. Next, please. But mind it, it is the most cheapest option. Normally, debt is what? It is loan. You can take the loan from bank and financial institutions. This is the most cheap form of funding, but it's very difficult to get for any startup. It is very easy to get for the established business, which is continuously earning profits. Because bank normally support or they give you the umbrella when there is no rain. If there is a rain, they will take the umbrella back. It's very, very simple for the bank. So they always look at the proven track record. They always look at a collateral security, which is not, both the things are absent at the beginning stage of the any startup. Yeah, please next. Next, please. Madam Sadhna, are you hearing me? Can you just move? Yeah. This is the last option today I am discussing. There are a couple of more, but yes, I'll restrict myself to this. After this, we'll have the question answer session. Revenue based financing is a new concept and phenomena comparatively. It's not very new, but yes, it is new out of all the options what we had discussed. Revenue based financing is nothing but what you do, you get some financing against your future projected revenue upfront, so that you can easily deploy that money for the working capital. Mostly it is given with a condition to use only and only for the working capital, so that you can recycle that money in a very short period of time and start making profit out of that. So it is given for inventory, advertising, marketing spending, etc. You have the repayment option is flexible. What happens in this, what the financer expect, that you return back this money in a pre-decided or predetermined percentage. Suppose you have taken say 1 crore rupees, and every month you are earning a revenue of say 2 crore rupees. Then you will say that every month I will return back 25 lakhs rupees to you, probably which is equivalent to your profit margin, or 20% the profit margin you will give back to him. Rest money you will keep with you, so that you can redeploy that money for running your cycle. There are very revenue based financing companies in India, but this option comes into the picture when you are at the growth stage or maturity stage and you are having enough revenue. There are many revenue based financing companies which are giving this kind of funding. Some of the companies which are giving revenue based financing is the Velocity, Club, GetVantage, etc. These are the revenue based financing. Next, please. Thank you very much. Now, I request the audience, if you have any question, you are welcome. I'm there to answer them.
Yes, those who have question, they can raise their hand, or else they can unmute themselves and ask the question, please. Sir, actually, I have one basic question.
Please.
Actually, you already discussed that pitch deck.
Yeah.
So what we have to include in that pitch deck, which can observe by the angel investor before investing?
The pitch deck is the most important document, as I already told you, to present to anybody. It is like a presentation. What is the idea? What is the way forward you are going to do? And how it will solve any problem which you are addressing. You should have a problem statement, then you should have the solution. That what is the problem, why you want to do this particular business, or why this and how this idea will help the people so that they grab the idea. So this is the most important thing which you should present in that. Then you should convert that into numbers, that over a period of time, this much inquiry I'll be getting. Out of this much will be converted into the business, and what would be the commercial model, means how I will make this happen and convert this into money, and what would be the profitability, and how I will market it into the market. These all things should cover in that pitch deck. So you should have problem, you should have solution, you should have the commercial portion, you should have the marketing strategy, and you should be able to present that what would be the volume and where you will be after 2 years, 5 years, and 10 years.
Okay. Thank you, sir. The next question from Dr. Nisha Rani Ranpise, ma'am. Ma'am, you can unmute yourself and ask the question, please.
Yeah. Hello, sir. This is
Yep.
Dr. Ranpise.
Yeah.
It was a wonderful session and very informative about all the funding agencies. Thank you very much. One question I have is you had mentioned about Amazon, right? So like you have to have a unique product and you should be able to sell it. You cannot have. Am I audible, sir?
Yeah, very well.
Okay. So, you should not have something which is already there in the market,
Yeah.
right? But once what happened near our house, there's a Monjani's cake shop. And beside that, Baker's Basket too came up, and I asked, you already have Monjani's out here. You are unnecessarily, there's so much competition. Why you want to open? So he said the customers get an option, right, to have different varieties and both of the businesses can grow. So my question is, sir, in such cases, I think, or what is your take on it, is as to, I mean, people can develop similar type of products, okay, if it is already there in the market, because there is growth of that product, like for example, in case of your mobile phones, right? So there's so many companies now. So what is your take on such a kind of an idea, sir?
Yeah, I tell you. See what happens, the Monjani's and this baking business. I give you the example, another example. One baker, 3-4 years back, just before 1 year before the lockdown, he met me. He's had a discussion with me. He was a budding businessman, engineer. He was working somewhere. He met me somewhere, and probably I was giving this kind of session or somewhere at the incubation center. So he came to me, said, "Sir, I want to meet you in person." So welcome, we'll meet sometime. Then he called me one day, "Sir, when can we meet?" It was Sunday. I said, "You can come today, no issues." I like that person very much. The vibrations were very positive. I'm at home. You can come my home also. You're welcome. He came, "Sir, I want to start a bakery." He was working in an engineering company. Engineer, hardcore engineer. So, why bakery? You are working with this. So, sir, I have a different idea of bakery. Please do not mistook me with this. The all-time bakery is available here. So what is your idea? I'll be focusing primarily on the corporate supplies. Then he explained me what is the corporate supply. Sir, what is your take on this? And can you make a first small presentation on this? And you have to cover this with the numbers. I'll talk on numbers. We'll discuss this. He walked 1 mile away. He did a survey also with what was his in mind with the prospective customers, and did a survey and discussed with me. Then I had suggested some corrections into that. This, that process went on for about 1 month. After we were in some shape, then we discussed. Then I said, yes, now you are good to go. Sir, bakery के लिए मुझे, you are the only person who are saying now good to go. I discussed with so many people, they said it is not going to survive. Then I said, see, you have some different idea. If it is only for survival, you can survive anywhere. Anybody can survive. Everybody has to survive. But if you have to really grow, then yes, this is the idea what you have come and what we have made in last 1 month. Because you are not going to supply here in the local market. You are going to supply in an organized market. This is one. When I said Amazon, can anybody, any of Indian company compete, a new startup compete with the pricing what the Amazon gives? We all are aware that all e-commerce company, all, take it Amazon, take it Flipkart, take it Myntra, or whatnot, Tata Click, till date, none of them have come into the positive. They are all in the negative. Take it Blinkit, take it Swiggy, take it Zomato. You take any e-commerce. There is not a single e-commerce company which is running into profit. How they are surviving? It is just, जो हिंदी में एक saying है ना कि मेरी टोपी इसके सिर पे रखा, उसकी टोपी इसके सिर पे रखा, इसकी टोपी इसके सिर पे रखा. But how long this will go? So when the any new startup come in competition with the Amazon, it will not be easy for them to survive. Another success story I tell you. I am taking long time, but you have raised a very pertinent question, because our young girls and boys should not jump into any kind of bandwagon, a wrong bandwagon. You have raised a very pertinent question. That is why I am taking so much of the time. 8 years back, I am one of the probably oldest startup consultants in India. 8 years back, I started this. For last 8 years, I am doing startup consultancy. 8 years back, one boy met me somewhere, probably at some cafe or somewhere. So he was just sitting beside my table, and I was discussing with somebody on the startup issues. I was not into startup consultancy at that point of time. I was in my corporate world busy. So he came to me, he walked to me. सर आप कुछ स्टार्टअप बोल रहे थे. मैंने कहा नहीं, मैं कुछ नहीं बोल रहा था, मैं तो जस्ट ऐसे किसी ने मेंशन किया था, वी वर डिस्कसिंग. सर मैं एक स्टार्टअप चालू कर रहा हूँ, इसलिए थोड़ा सा आउट ऑफ क्यूरियोसिटी आई केम टू यू. तो मैंने कहा बैठ जा. I was with one of my the friend, तो उसके लिए मैंने कॉफ़ी बुलवाया. देन उसको भी कॉफ़ी पिलाया. क्या स्टार्टअप है तुम्हारा? बोला कि साहब मैं उस समय अमेजोन इंडिया में नहीं हुआ करता था, फ्लिपकार्ट वाज द पॉपुलर. एंड to be very honest, I was also not very tech savvy as those days, and I never bought anything on the Flipkart 8-9 years back. तो मैंने कहा क्या करोगे इसमें? मैं साहब फ्लिपकार्ट का यंगर ब्रदर बनना चाहता हूँ। तो मैंने उससे अंडरस्टैंड किया। फिर मैं घर आया। देन माय सन वाज स्टडीइंग एट दैट पॉइंट ऑफ टाइम इन द फर्स्ट ईयर और सेकंड ईयर मणिपाल, सो ही हैड कम हियर इन द वेकेशंस। तो आई डिस्कस विथ हिम व्हाट इज फ्लिपकार्ट, एंड बोला कि पापा इट्स वेरी सिंपल, जस्ट डाउनलोड इट on your mobile, then he helped me and had shown me this way. It works with this way. Fine. Then I scrolled through, I understood it. I saw the pricing. I saw the pricing in the market. I asked some of the items pricing to my wife, because I normally had gone as a driver only along with my wife. So I asked the pricing of a couple of products. So I found that it was quite cheap even those days here at the Flipkart. I compared the prices. Then out of curiosity, I compared the prices of many things, even the grocery things those days. They had just started grocery those days. So I went to the grocery shop. I compared the prices. I made a list of from Flipkart. Then I took the prices of those items from the grocery shop. Then I took the pricing of the clothes also in the market. Then I took the pricing of the electronics also in the market. And I spent a couple of time out of curiosity just. Then I called that boy one day. मैंने उससे पूछा कि हाउ व्हाट इज योर आइडिया ऑफ डूइंग दिस बिजनेस एंड हाउ यू विल सर्वाइव दिस एंड हाउ दे आर सर्वाइविंग। तो बोला सर मुझे नहीं मालूम कैसे सर्वाइव कर रहे हैं। मैंने कहा तुझे मालूम होना चाहिए कि हाउ दे आर सर्वाइविंग विद दिस प्राइसिंग। आई हैव सीन फॉर द फर्स्ट टाइम, सो मुझे नहीं मालूम कैसे सर्वाइव कर रहे हैं, नाइदर आई हैव रेड एनीवेयर। तो मैंने उससे फर्स्ट क्वेश्चन किया कि हाउ यू विल सर्वाइव विद दिस प्राइसिंग, बिकॉज यू विल हैव टू कीप द प्राइसिंग लाइक दिस और लोअर देन दिस, then only you can flourish, otherwise you will not. बोला सर मुझे मालूम नहीं किस तरह से ये लोग कर रहे हैं, तो वॉल्यूम परचेजिंग करते हैं। मैंने कितना भी वॉल्यूम परचेजिंग कर ले, इससे हाफ प्राइस में तो बेच देगा क्या मार्केट से? नहीं बेच सकता था। तो मैंने कहा कैसे करेगा, ये नहीं चलने वाला है तेरा। देन क्या करना चाहिए सर? मैंने कहा तो you should see that what is the problem in your area and what is the problem area which you can solve. Then he came to me again. मैं कुछ करना चाहता हूँ सर इस लाइन पे, लेकिन ई कॉमर्स लाइन। मैंने कहा कि देख सबसे बड़ा एक प्रॉब्लम मुझे दिखता है अपने सराउंडिंग में कि वी डोंट गेट मिल्क एट द डोर स्टेप। ऑलमोस्ट एवरीबडी हैज टू store the milk for next day morning or fetch the milk from the nearby shop. Why don't you attend this problem? So he started laughing, क्या सर दूध वाला बनाओगे मेरे को? Then I convinced him. मैंने कहा तू कर business. Then he got the courage and started doing it. बोला सर मुझे फंडिंग चाहिए। I gave him the funding from my pocket. मैंने कहा कितना फंडिंग लगना है इसमें? So लाख रुपए करीब उसको मैंने दिया, 50,000 करीब। Then I helped him in market survey. I helped him getting the first 100 customer in my society. When he started serving, you will have to have the unique selling proposition. What is that, sir? At 6 o'clock before sunrise, the milk should be at the doorstep. If you can attain this, then I am there with you. Otherwise, I am not there with you. And you have to do it. Don't expect that I will come and deliver the milk with you. You have to do it, and how you will do it, it is your problem. You solve this problem. Then he came with two friends. Bola, we'll do it, sir. You help us getting 100, first 50 customers. I'll get you 100 customers. I got him 100 customers. Nobody was ready to give him the advance for the milk those days. Like we do today, the BB Daily. You fund the wallet and get the milk at home, mostly. Or some other platforms also. So I helped him in funding also and started doing. After 6 months, the people have started giving him the advance also, once he established the line. Then, of course, we exited it. We exited in several crores. We had 12,000 customers on board
Oh,
at one point of time. And at that point of time, we were not only selling milk, we were like a big basket.
nice.
I'll not name the company, the company which we had 8 years back floated and to whom we exited. But we were having 12,000 customers on board at that point of exiting.
Right. Fantastic, sir.
During pandemic, at the peak time, we exited.
Mm-hmm.
Yeah.
Okay.
We found the most opportune time. So what I'm trying to say, you will have to see that where you can survive. The bakery is such an item that it is quite localized. So you have to depend on some bakery or other.
Right.
But
So it depends on the product, like.
yeah. You have to have some unique idea. Bakery is also survival in a small way, in a bigger way. Bigger way, what I narrated, the smaller way, a local shop. Because the local shop is local shop. Only the local people will buy from him. Nobody will come to the on for buying the bakery product from probably the Hadapsar or somewhere, unless you are like a Kayani bakery. Yes.
So one more question. How can one person become a part of angel network or the investor? And what
Uh,
is the minimum capital required, or is there some minimum capital required?
it's very simple, very easy to become the part of the angel platforms. There are couple of angel platforms. I am also associated with couple in the capacity of their screening committee or at some place probably investor also, and most of the places as the screening committee. They charge some fees from the investor. They make you member of their platform. They expect that to pay you some fees, 5,000 rupees to 50,000 rupees, depending on the reputation of the network. And they say that ticket size is minimum ticket size is 5 lakhs rupees. And it goes up to in the multiple of 5 lakhs, anything.
Okay,
So it's very simple.
fine.
And angel investment, becoming angel investment is still simple. If you have money, you evaluate any in startup, invest the money. Nobody can stop you.
Right, sir. Thank you very much, sir. Thank you very much. Yeah, that's it from my side. Sadha.
Thank you, madam.
Next question is from Dr. Praveen Vadesa. You can unmute, sir, and please ask the question.
Hello, sir. Good afternoon. Can you hear me?
Yeah, very well.
Okay. Yeah, it was very nice session, sir. I got few questions. So first question from my side is, can a foundation or a society or Section 8 can be a startup?
Can be startup, no issues. But here, the foundation, Section 8 company, society, trust, the first and foremost thing is if they are earning profit, they are for profit or for not for profit. Section 8 companies are mostly not for profit. So if you are not for profit, then there is no point becoming the startup. Why you become the startup? You can become the startup. That's not the issue. Nobody can stop you.
Okay, so you're saying if the foundation or society is working for a profit, can be converted as a startup, can be said as a startup.
Yeah.
Okay, so the next question relevant to that only. So what will be the best way for them to raise the funds in that case?
society, foundation, or the Section 8 company is not at all the way to get the funding, because in that the exit is not possible for the investor. Easy exit is not possible.
No,
It's very complicated. So
no, but the
best,
foundation or society is going to be for the profit purpose.
even then, in case of society, they cannot give you the particular percentage of shareholding. Foundation cannot give the particular percentage of the shareholding. Section 8 company, of course, give the percentage of the shareholding. But these things are not having concept of the shareholding. So the profit sharing is not possible in the foundation, societies, trusts. So the best way is to become LLP or the private limited company. Private limited company gives the maximum confidence to the investor, and LLP also to some extent at the initial stage is okay.
So for LLP, there is an issue with the external funding, right? If you are registered as a LLP, you can't get outside funding. Outside means international funding.
Yes, that is there.
Okay, thanks. And then one more question is regarding the execution. So one of the part, as you mentioned, of the startup or entrepreneurship journey is the team. That's what I also think. So one of the problem I have faced is like keeping the team together. So when we talk about the students, if they are having entrepreneurship mind or they want to do the startup, yes, there are other colleagues and other students, they can form a team, but it will be only for limited for when they are actually there in the college. Okay, and it will be there if they manage to raise the funds. So initially funds are raised which are for 18 months. So let's say they got pre-seed or seed investment, and they have to continuously raise money to make sure that the company is going on. So that is one thing. And the second stage is when actually they come out from the college and they're managing this company. And if they are finding it hard to raise the money, then how is it is possible to keep them together? Because the team sometimes having their own issues as well. So moving out is easy for them compared to the founder. Founder has to stick to the idea and the execution because he's raising the money, he's actually convincing the investors. So what is your comment on that how to keep the team together?
Perfectly all right. I give you a small statistics before answering your question. You will get the probably answer with this statistics itself. Out of 100 startup, 5 years down the line, only 90 survive. And in the next 5 years, out of those 10, only 10% survive, means only one survive. Means over a period of 10 years, only 1% startup, means out of 100, only one survives. The reason is what you are mentioning. The almost 80% reason is in most of the cases is what you are mentioning. The 20% is the other external reasons like the bad idea or maybe some government regulation changes or something. So yes, it is a very important issue and very pertinent issue. So whenever a team is formed, it should not be just with the sentiments. It should be with the mind. It is purely a mind game issue. If all are convinced that they want to walk together for a longer time, then only they should join hands, otherwise they should not join hands. There is no rocket science, there is no hard and fast rule how they can stick together. The only thing is the belief and idea. If they have the belief, then they should come together, otherwise they should not come together and spoil the idea. That's simple as that.
Thanks. Thanks. There's one more question from my side. So you mentioned about venture debt funds.
Yeah.
So you said that if a company has raised fund from venture capitalists, they can when they next raise money, they can get from venture debt funds. So
Yeah.
my question is, can so a company who has raised the venture capital funds, if they in the next round, if they go towards friends or corporate societies, there are societies who can lend, if they get money from there, can that be considered as a venture debt fund?
It can be. It is a, see, venture debt fund is nothing but a debt. It is a
Debt,
loan.
yeah, loan.
Loan.
Yeah.
So you take the loan from any institution, any agency, any individual. It is a loan.
Mm-hmm.
So nowhere it is written as it is a venture debt fund. Nowhere it is a written. It is a venture capital fund which is giving the loan is the venture debt fund. It is as simple as that. Whether the loan is given by an individual, given by an angel investor or friends or bank or financial institution or venture debt, it is a loan. This is as simple. It can be in any order. This money can come. There is no hard and fast what I told. What I told that the investment at this initial stage you will get from this early stage this is not a rule. It is a practice, which is normally we have seen. The order can be here and there. That is not the issue at all. There is nowhere it is written that this order is the order. It can be any sequence, any money can come.
Thank you, sir.
Yeah. But what I have tried that this is normal practice. We see in our practical life that in this order or in this sequence money comes.
Thank you, sir.
Welcome.
Clearing that out. Thanks.
Yeah. Next question from Ravina Rajpurohit. Please unmute yourself and you can ask the question.
Yes. So am I audible, ma'am?
Yeah.
Yes.
Good afternoon, sir. This is Ravina here. Sir, actually, it is a well basic question, but still I want to know it from you. So throughout whatever I've listened to you through your experiences, it seems that you have helped many entrepreneurs in the ways of, through the fundings and through their journey as well. So I wanted to ask, as a fresher, if somebody wants to pursue entrepreneurship, there are it should be like she should have that risk taking attitude. But other than that, if at all you build up a startup, you face many ups and downs in your business. So how one should deal with those, so can you throw some light on that?
Sure. Just I answered to Dr. Praveen Bade just before you that you should have conviction and belief in your idea. That's the only thing which motivates you to get going always. Because the startup journey at the early stage is not very easy. So you should have, people will laugh on you, people will not support you, people will say that this is a bad idea. But if you have conviction and belief, you have the data points supporting your idea, valid data point. It is not a created data point sitting in the room. Like I gave you the example of 8 years back starting online milk delivery system. Nobody had thought of those days. What today we see in our day-to-day life, that most of us, we get the milk on our doorstep through various channels, including the big basket. So this was not at all thought of during those days, 8 years back. And his was the first reaction was the people will laugh at me, that you become a milk supplier, or you will become a milk wala. ठीक है. It was. But when he thought of this, he came with the survey. He himself. He was convinced. I was convinced. We did a proper survey. I helped him in getting a good survey initially, a door-to-door survey. So you should have your idea, you should have your belief, you should have conviction. That's all. Nothing else can support.
Yes, sir. Thank you so much.
Yeah. From anyone else, please ask the question. Yes, anybody have a question?
Yeah, one last question.
Yeah.
Yes, ma'am, please, you can.
Yeah. So, what is your take on the financial literacy in this young generation?
Very important. I told you at one place that I visit couple of incubation center and focus on the financial literacy, because I mentioned at one place that most of the startups are techies. Basically, they are having the technical qualifications, but they are not having a very good grasping towards the financial and the commercial aspect of the business. It is one of the most important thing, and the commercial literacy is must for everybody in this on this earth. I would say, from you to me to anybody, from top to bottom, anybody. I would say from security guard to the CEO of company, everybody should be commercial literate or financial literate.
Yes, sir. I guess then, so you being a CA, we should have a lecture on financial literacy from you too, sir.
Anytime, anytime. Not the issue at
Yeah.
all.
Yes. Thank you very much. Thank you.
Thank
That's
you.
it.
Yes, please, student. Have any questions? I think no questions, sir.
Yeah. No issue.
Aishwarya, you can proceed for the vote of thanks, and afterwards we will take a group photo, sir.
Sure.
Thank you very much for your session, sir.
Thank you. Thank you, madam.
Ma'am, am I audible?
Yes,
Yeah.
Aishwarya. Yeah.
First of all, thank you so much, sir, for the amazing session and your really valuable inputs and clearing all our doubts. Now I take the privilege to propose a vote of thanks and acknowledge the contribution of those who worked really hard for this event to take place. I would like to thank Principal R.B. Patil, sir, and our guest speaker, Dr. Vivek Jain, sir. I would like to thank the whole staff of SCOP and the students for attending today's session. I would also like to thank Professor M.N. Navle sir, Founder President, Dr. Mrs. Sunanda M. Navle ma'am, Founder Secretary, Mr. Rohit M. Navle sir, Vice President, and Mrs. Rachna Navle Ashtekar ma'am, Vice President Admin, Sinhagad Institutes. Now I request ma'am to please take off group photo. Before that, I request all the participants to please switch on your cameras.
Just a minute. Yes. Thank you very much. All the students as well as staff and Vivek, sir. Thank you very much. Now I conclude here the session.
Thank you.
Thank you very much.
Thank you, sir.